following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. And be safe if you're driving out there. We got a heck of a market here. Let's take a look at one of our 4 agreements. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 621. You get the NASDAQ off 149. S&Ps are down 61. That puts the NASDAQ down 2.1%. Dow Industrials down 2.4. S&Ps down 1.7. For the year, folks, all the indices are in the negative now. You get the Dow down 1.2%, S&P's down 1.1%, NASDAQ down 0.3%. And you can expect it's going to be quite a close out here because just before I was coming on, those S&Ps just went from down 50 to down 60. Gold contract down $3.70, trading at $12.21 an ounce. We have silver down 13 cents, $14.27 an ounce. Light sweet crude, this is the hammering out here. Now, light sweet crude's in an ABC structure on the way down. You're down $3.91 right now. $53.28. Your price projection on light sweet crude, $45. It's blowing away the B point, has the volume behind the move, has everything happening. Unleaded gas on the way down to 130. Wholesale. Notes and bonds. You get the 10-year note up 1 tick, 119.11. 30-year bond up 9 ticks, 140.02. The 10 and the 30 both are over their swing highs from October. The differential is that the 30 actually has the volume. Looks like it's going to have the volume. If it doesn't, at the end at 4 o'clock, it's going to be just shy of the volume as it's taken out that price point. King Dollar's up 679 ticks now. King Dollar got back on the other side of its August 15th swing high. You do have light volume, so we'll see whether it's going to hang up this time. You got 18,000 contracts. It's light volume. The number that we're talking about, though, is this 96,450. Right now, we're at 96,745. Euro right now is trading out at a price point of 113.63. The yen is at 112.69. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Okay, so the SPY's down $5.50. You're at 263.60. Bottom line, as you bring this baby back, I suspect there's a couple of different things happening here. It looks to me like this market's going to close at its lows. And if we get that coming into Wednesday right before Thanksgiving, bottom line, this thing could jump the creek just as the NDX 100 jumped the creek this morning. I'll show you how this is lined up. The number that the S&P is going after and has been going after for quite some time is that high volume low from February, 252. We hit 259 3 weeks ago. Bottom line, right now, we hit 263 today. If we close at these lows, I suspect we're going to jump the creek because I'll show you inside the NDX 100 what we did out here this morning. And this is always really dangerous, jumping a creek. The reason it's dangerous, folks, is that you normally just don't jump a creek and just come right back on the other side of it. You'll eventually test it, but the way these set up, when you jump a creek, man, bottom line, they like to go a lot lower. So we jumped the creek this morning. The Qs are going after that high volume low also. That number is 150. 150 and 12 cents. We hit 157.13 today. And, you know, what the Qs have done, the Qs basically had a nice counter trend bounce this morning. All it really did is got up and almost filled the gap. The gap would have been 161.54. You got to 161.38. Then it blew apart again. So bottom line, I do expect we're going to see that number get hit, meaning that high volume swing area. If we go over to the energy market, we take a look at the XLE. XLE is pounded into the last low that was out here. Last low, $64.34. We hit $64.46 today. And if we bring this back, you're going to see, I believe this actually did hit the high volume swing. Yeah. So that number is $64.45. We hit $64.46 today. Meaning the February 9th. The February 9th low, folks, is a big number. Now, the oil and gas S&P equities actually look like they're also going to close at their low. And if they close at the low, that's going to be another heads up that we're going to jump the creek at the high volume low. And if we go over to the financials and we take a look at the financials have been giving us basically an indication that this high volume low may not hold from February 9th. Inside the financials, it's having a hard time holding that price. That price is $26.76. You're below that price right now. We'll see how this baby shakes out. But right now, that high volume low is not holding in a couple of the higher indices. Very important indices. General Electric. General Electric's down at 23 cents. And if we go over to GE, GE's in a mess of trouble. And what is happening fundamentally now is that you're getting the aspect, top line here, default insurance signals the worst isn't over. The cost of protecting GE bonds against default, which surged this month as investors fret about the company's ability to pay down its debt. Bottom line, GE's 5-year credit default swaps trade at 270 basis points, the highest since October of 2011, just about 50 basis points short of the year's record. Bottom line, folks, is that listen, my take, GE's going BK. That's the bottom line. We'll find out exactly how much more debt they have and how much they've been hiding for a long period of time. Apple's taking it on the chin right now. Apple's down $9.76. Apple thought they could actually get away with just saying, okay, we're not going to give you the numbers anymore of our iPhones. Well, guess what? The market's saying, well, you don't give us the numbers. Bottom line, we're going to sell it off. Now, Apple's trading at 176. The number in Apple, basically 163 to 150's game now. It already busted into its lower range, came in on a violent move, has the price, has the volume. They're selling it down. You can expect more selling as we're coming into this closeout here. Dow Industrials right now are down 600. NASDAQ is up 137. S&Ps are down 59. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 550. NASDAQ off 120. S&P's off 51. We are going to go to our man, Mr. Basil Chapman, but I want to give everyone a heads up out here. Now, this is a big heads up, folks. This just come across the tape from the CDC. Romaine lettuce, okay? Now, listen to this. This is pretty sick, man. They just called romaine lettuce is unsafe to eat in any farm, in any way, and they're saying that in a restaurant in the whole country, okay? What's going on here, they're saying the CDC is telling consumers to throw any romaine lettuce away that you already have. Restaurants should not serve it, stores should not sell it, and people should not buy it no matter where or when the lettuce was grown. And what's going on here, this is not the normal E. coli. That's what they're saying. This E. coli, bottom line, let me see. The common strain of E. coli was detected in 6 of the sickened people. Bottom line is that 5 people died from the most recent outbreak. So this is a whole different strain of E. coli. So, you know, Thanksgiving's coming up. If you have some friends that get romaine, bottom line, tell them, folks, because, you know, a lot of us love romaine lettuce, and that is, like, pretty intense, man. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Basil has an outstanding program, folks, right here, every trading day. 12 to 1 Eastern Standard Time. Also has a great newsletter, the opening call. You can check out the opening call. You can get the opening call for a month, 6 months, a year, all with a 30-day money-back guarantee. The way you do that, you come over to our website at TFNN, go to newsletters, you see the opening call, check it out, grab it. Basil Chapman, what's going on, brother?
Hi, Tom. How are you doing? Josh, I didn't hear about that.
This literally just happened. It was just, this is at, the tag was at 318. It's a wow, man, because this is normally, folks, it happens in parts of the country. They're saying it's everything, and they're saying this
everywhere.
It's a deadly strain.
Gosh.
This strain kills you. That's the bottom line. So.
Wow, that's serious.
Yep. Not good. And we get a serious market here too, man.
And we've got a serious market. We're down 559 right now. So looking at the Dow, if you look at this left-hand chart, when I had that sell signal the day after the all-time high in the Dow, one of the aspects that I was looking at was in the patterns I look at, there's a cup formation, And if on the left, you remember I was speaking to you about the January high in the Dow, and I drew this gray line, this vertical line. I said the MACD, the moving average convergence, divergence, and the slow stochastic were very strong, even the on-balance volume at that high. But when it made the new high at 26,951 in October, you didn't have those, the technicals were not there. They just weren't there. And I drew there, you can see that pink vertical line. And we are looking at the results of that now. So the pattern that I look at in my CD introducing the Chapman wave methodology, I'll just grab it quickly. It's chapter 17, just to show the pattern. It looks like a lowercase h. And this lowercase h can continue on the way down for quite a while. And at some point, it forms either a bigger H pattern or a V-shaped pattern. We haven't got the V-shaped pattern yet. We're still in this H. So you'll see that in the Dow, at this particular point, on the left side, the low was October the 29th at 24,122. There was a very sharp rally, and then, of course, there was that midterm extension to the rally and went to 26,277. And now it's come down. The Dow and the S&P have not tested the October the 29th low, even though it feels, in every other way, it feels like they should be even lower, but they haven't on a purely technical basis. The QQQ, the Index 100 trading vehicle, is, in fact, here it comes, is lower. And the low of 160.09 on the 29th of October, there was a rally up to the 50-period moving average, and then it fell, and today it went underneath that. And if you look at the weekly chart, I don't know how the monthly charts all around, unless it's just a spectacular 8 days or something coming up, how you're going to be able to work the monthly charts in such a way that they repair the damage quickly. So I'm looking at this and I'm saying, you know, this is the first pretty decent decline we've had in the really important FANG stocks, the ones that kind of moved the market for a very long time and were just immune to real pressure to the downside. And now they're starting to fail, but they're failing in the sense that they're making such quick, sharp percentage losses on the downside that even there to repair the gain, you know, this is where the last few days is where you're seeing, I'm pretty sure mutual funds are starting to get out of these big names. Well, they don't just turn around. Maybe hedge funds do, but the majority of funds take a long time. You've shown, when you talked about the funds and the big blocks, you've talked about how they're starting to get in, and as they get in, it takes a long time for them to really build a position.
Yes.
Well, that's the same on the way out.
Right.
So I think that we've got to be very careful here, and even if there are rallies, I think they're really trading rallies. Don't think of them yet. I don't think at this particular point you can think of them as something where you can put a big position on. Maybe you start small and you say even lower down I can add, but I've been talking about this, I think, for maybe a couple of months now. I've been saying this is a good time to raise cash. There's going to be plenty of opportunity. Don't rush into it. Take your time, think it through, and just don't panic. And I think that this is exactly the issue that we've got right now. That the Dow, which has the best mix of all the indexes, because it has defensive, it has financials, it has like a housing, like a Home Depot. It's just everywhere. And it's saying that it's holding a little better, but it's not looking too good. And if you look at the weekly chart, I think it was last Friday, I spent the whole of my Tiger Technicians hour talking about this particular candle. I was talking about, someone had asked me about, there's a technique I call the Chapman wave Roman candle, and we spoke about it back in February. It was after that January high, and I said, this particular candle where the market, whatever bar it is, daily or weekly, whatever, it doesn't matter. If you open almost at the top of a particular high, and then you open, make just a tiny little wick, like we did right here. This is last week, the tiny little wick. And then you go down sharply, and then come back and close about halfway to a little bit more than halfway for the full candle. That red candle can, in fact, turn into a very good signal, because if the price closes at any particular shorter-term time frame, we're looking at a weekly chart. So on a daily chart, if it closes below the midpoint of that lower wick that I'm pointing to in the middle chart right here, there's a good chance you're going to test the low. And look what we've just done. And I even typed it in, Chapman wave Roman candle. and now we're way below it. So now the key support, this is a long-term trend line, would be between 24,242 and 24,122, the low that was made on the 29th. This is I'm just been warning that this is a time for caution. You don't have to. There'll be plenty of time. Even if there's a very sharp rally, some of these stocks are going to have to come back and retest whatever low they're making. And remember, I spoke about earthquake and aftershock. I call it internal low and the residual low. And sometimes you can have many aftershocks after the earthquake. And that's kind of what we're looking at. That October the 29th low was quite important, but now we're starting to see the results.
This is almost an earthquake on top of an earthquake.
It is, yeah.
Listen, folks, come over to our website at TFNN. You're going to go to newsletters. You're going to go to the opening call. Great newsletter. And don't forget, every trading day right here. Check them out. 12 to 1 Eastern Standard Time. Bounce, you have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom. You too.
Thank you. Stay right there, folks. We'll come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today. TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Nadex Options Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 577. We get the NASDAQ off 110. S&P's down 48. If we look inside the Dow, the leaders on the way down, we take a look at this, is that excuse me, folks. Point-wise, what you have, Apple is the leader on the way down. That's putting the 62 negative points in. Goldman's putting 40. 3M's putting 30. United Health's putting 29. There's not one Dow stock that is in the green out here. If we go over to Goldman Sachs, we take a look at Goldman. Goldman out here, bottom line, breaking out its lows. You're at 192. Put this back. Okay, so you got Goldman was coming into its breakout area from November, blew that's November 2016, by the way, blew that away at 220. That's saying that next leg for Goldman, well, that's interesting. Okay, so it's right. Okay, so you break, so we're at 192. If we break this 192 area and get to, like, say, 189, which I suspect we will in the next few days, then you got big trouble, because then you're down to 138 in about a heartbeat. The 193.60 would get you in the lower range inside Goldman. We go over to the NDX 100. We take a look at the NDX 100. You got Ross stores are down 9%. That's down $8.20. JD.com is down 7.7. You got Mercado Libre down 6.3. If we take a look at some of the point statistics inside the NDX 100, you get Bookings.com is down $35. You got AutoZone down 33. O'Reilly Automotive is down 17. Charter Communications is down 15. Amazon is down 11. But, you know, in Amazon's case, which is pretty interesting here, is that this is going to be one to really watch real closely. Amazon is trading down $10, 15.05, 15.01. What Amazon has done, though, we bring this back, what you're going to see is that you got to the number to keep your eye on. So we're always talking about this February 9th high volume low. Well, the high of the high, the high of the bar of the high volume low is 1460 in Amazon. The low is 1265. Now, we went to 1420 today, so you dug into the bar, and it looks like it's going to reject price. So that's going to get intriguing because, you know, Amazon in general, folks, if we go back to the 2008 debacle, Amazon was the first one that was off its lows, and was off its lows about 4 months before any of the other equities were. So we'll see how this baby shakes out, but it looks like for today that it's going to reject that price at 1460, and when you set up like that, it's like, okay, that can set up for a bounce. So we'll see where this comes down in the case of Amazon, but it may give us a heads up that that is going to be the number that we're going to go to, meaning that high volume low. We go over to Google. Google's setting up the same way, and this is what you have with Google. Google's one of the first ones that came down to that high volume low, 992. It hit, that was 992. That was in the week of February 9th. It ended up testing that the week of March 30th, got to 980, rejected it, went to a new high. 4 weeks ago, however, we got down to 995, and we had volume at 995. So the correlation there is you get 995 going against, oh, here, you have 12 million going against the 11 million. That was the test, going against the 15. And that being said, today we get down to 996, and it looks to me like this is also going to reject lower price. So this is going to be pretty cool watching how Google shakes out, Amazon shakes out. Facebook, there's no help for. Facebook bottom line is at 132, different setup altogether. You know, Facebook bottom line, you know, you're at 132. You're already below the lows of March. That was the high volume low in Facebook, 149. And Facebook looks to me like it's going to go out and test this 113 once again. You know, you're digging into the 131 out here. 113 is probably game out here. Inside the, okay, so let's go to Microsoft. Okay. Okay, let me get you some charts there. Rearrange that. There we go. Okay, Microsoft. Little problem in paradise with Microsoft. And Microsoft's been one of the strongest stocks out there, folks. So Microsoft off its high of 116. Microsoft has monster volume today. You bottom line, you're breaking the last swing low of 100, and you're at 47 million shares. Now, it's coming into 63, but that's too much volume. It's just too much volume, man. And what that Microsoft does have out there, that Microsoft also hadn't tested the high volume low of February. And that number there happens to be 83. So you can expect there's going to be more destruction out here. The GDX, let's take a look at the gold stocks. Gold stocks out here have rejected lower price out here today. So the way that the gold stocks are setting up right now is going to get intriguing in the aspect that we have a full day tomorrow, we're closed Thanksgiving, and on Friday the market is closed at 1 o'clock. The gold contracts, well, here, let's do the GDX first. GDX came down today to $18.34. Bottom line, you're at $19.34 right now. It's a nice setup. It's a setup that it looks to me like it's going to be game going after the swing highs of the 23rd of October. If we go to Franco-Nevada and we look at Franco-Nevada, there's very few equities at all, folks, that are in the green. Franco-Nevada is not only in the green, it's up 91 cents, but this is pushing with volume, which is pretty cool. You know, this thing wants to blow out its swing high. You know, it's slightly over it right now. What it's also doing is going into the downdraft that had been created out there on August 15th. And August 15th inside the metals market is a big day. That's when gold got smoked, silver got smoked, and the dollar hit its highs. But I like how that Franco-Nevada is set up. Also, Royal Gold, and both of these are streaming equities. Royal Gold today rejected lower price at $73.38. You're trading $75.07, and the differential here in Royal Gold is that Royal Gold had been a laggard. You know, Royal Gold was leading for a long period of time, had been a laggard, started perking its head up last Thursday, started hitting a stride with volume behind it. So that's a pretty decent heads up inside the gold and silver market coming into the next couple of days. If we go to an Eco Eagle, you're going to see an Eco Eagle also rejected lower price today, $35.13. We're at $36.04. That is also looking to me that, okay, that thing baby wants to break topside. The gold contract itself, that's down $4. That hasn't done much. It really hasn't said much either. The thing that's intriguing, of course, is that you have this dollar that got back on the other side of its August 15th swing high, and, you know, you get price spread again here. I mean, there's a big price spread out here, say 95,370 to 96,770. You know, there's no doubt we're going to start hearing about the interest rate structures again, because when you have a market that gets taken apart like this, folks, the Fed can say they want to go up on short-term rates as many times as they want, but guess what? That is not reality when the amount of wealth that disappeared in 6 weeks is extraordinary. And you're talking about from 25 to 35%. You know, the market might be flat, but guess what? All the high flyers, they're down 25 to 35%. And from October 3rd, and we're at November 20th. Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the path of least resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's down 500, NASDAQ is down 105, S&Ps are down 46. And if we go over to Bitcoin, folks, you're going to see Bitcoin is traded $2,000 lower in 6 days. Pretty amazing. So Bitcoin 6 days ago was at 62.94. Right now you're at 41.78. And if we bring this back, this thing's going to get ripped apart. This is pretty intense, actually. So you bring this, it looks to me like 3,000 is there. And the way this is coming down, folks, you know, I suspect we're going to be like at 1,200. It's like 400. It's all game now. It's all game. You know, when you go from 6,500 to 4,050, you know, let me see. That's this month. Let's see what we did this week. So this week, just this week, we've gone from 5,600 to 4,000. Last week we started. So in 2 weeks, we've gone from 63 to 4,000. And the way that this is actually set up, I mean, we don't have volumes on this, but the way this is set up, it doesn't have a huge amount of support because there weren't floors that were built on the way up. This just blew away the floor like at 4,500. So it's like, okay, now 2,000, 2,600 is game. And now we've traded 2,600. We only traded 2,600 for about 8 weeks also. You know, so once you get this type of destruction going, looks to me like we're going to be back at $1,000. It's pretty. That's about as intense as you get, man. I mean, bottom line is that I was mentioning it yesterday. The longer that you build cause, and Bitcoin had built a long period of cause, that's where trouble comes in a huge way. Let's go take a look at the SMHs. SMHs. So the SMHs out here, they are trading $90.68. They're just barely in the red. They come back down. They tested the lows that were established out here on the 29th of October. And, oh, this is in big trouble. Yeah, interesting. Okay, so, see, this is going to be a heads up for us, too. Okay, this thing could get a lot, this could be a lot deeper than, so, if we go back in the SMHs, what you're going to see is that your high volume low in the SMHs was $93.88. You know, consolidated for over a year, blew the baby away, and then in the SMH's case, you had 68 million shares going against 66. So the SMHs actually blew away the high volume low with another one. That being said, then you get to a lower price. Then we get to 86. Now the SMHs are going to have to get back inside 93.88 first off to prove they can do anything. And let me bring this back now on a monthly. It's trouble in paradise. Now you get a volume off the highs. Yep. So you talk about volume off the highs, man. We did 219 million off the high after making a high with 114. So you're talking about double the amount on the way down. The amount of repairing that has to get done is pretty intense. So there's going to be more problems in paradise, it looks to me, in this market. As an indice, breaks the high volume low and can't get above it, the more of those that you actually see, the more probability is that the high flyers won't hold the February 9th high volume low. That's how you basically take a look at it. If we go take a look at ExxonMobil, Exxon, we're at 77 bucks. Bring this back. Okay, so this is just a consolidation. This is still in a consolidation, but that wants to go to 66 bucks. Chevron, 116. Yeah, that wants to run down to 108 on Chevron. You know, so that's basically a decent number also. It's hard to comprehend, actually. You know, let's go to Boeing, because Boeing is 25% off its highs. Now, Boeing basically came all the way back today. It traded down at 296. Right now, it's at 318. Let's see. But that's going to break. Yeah, that's coming into, let's see, and on a low volume week. Now watch how this is playing out. On a low volume week, 113. Yeah, on a low volume week, this is going to have more volume. And that's a danger point also. So Boeing is down from 394. You're at 318 right now. We hit 296 this morning. And it's been making its way back. But that also has some problems. And the Boeing's problem this morning, folks, is that they canceled their conference call with the airlines about the aspect of the plane that crashed, one of their 737s. No, it's a 767, I believe. One second, let me get this. I believe it was a 767. Yeah, it was a 730. No, it was a 737. 737, the MAX issues conference call basically was canceled. And what the pilots are saying is that, hey, listen, Boeing, you changed the software inside of that plane without explaining to all of us what exactly you did. So what Boeing is saying is that they're waiting for the investigative report to come back from that crash, and that's what they're claiming on. That's why they're not having the conference call. Well, guess what? Communication, folks, you better be talking to someone when you just had a huge plane crash, 186 people died, and the pilots are basically saying that, hey, they haven't given us a heads up. Let's go over to the gasoline market, because, yes, the markets are lower out here today, but what will happen inside the gasoline market, we are going to be saving quite a bit of money. So gasoline wholesale is down 9 cents today. We're trading at $1.49 XB1. So XB1's a symbol for a continuous contract. And what you're going to see here is that you're blowing away the B point and you get volume behind the move. So this is quite an ABC structure on the way down. Well, let's see. No, it might not have the volume. 70. No, this contract's not going to. Maybe we just change contracts. Well, let me bring this back a little bit further. Give you an idea where it's going at least. Put this on a monthly. What you're going to see, and what has happened is that the gasoline market has been giving us an indication of where the crude oil market wants to go. Yeah, oh, this is intense, man. So picture, we're at 149. We're going to like 128, and it's possible you get down to 113. And 113 brings you back to the lows of February of 2016. We bring this back a little bit more. Ooh, this market's hurting, man. Yeah, the low of the last 10 years is 78 cents. That was in 08. The next low was 89 cents. That was in February of 2016. That's even hard to comprehend that even February 2016 we had been that low. It went up fast, it came down fast, and that's going to start doing some real destruction out there. The thing that's intriguing inside even the bond market today is that, you know, bonds have been strong, but they're not that strong today. There's nothing in this market that's strong today. And what that basically says, folks, is that this is a liquidity event. And what a liquidity event is, it's really dangerous. It's an event that the amount of money that has been lost was fast and furious. And the rest of this sell-off, where seemingly that these things haven't got that hurt, basically people are selling it because they want cash in their pocket versus anything else. Stay right there, folks. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is off 587. We get the NASDAQ down 132. S&P's off 55. It's about 1.6%, and the NDX 100 and the NASDAQ, as well as the S&Ps, 2.3 in the Dow Industrials. If we go over and take a look at that Dow Industrials, you're basically running into the last low that was laying out here in October. If we bring the Dow up and we take a look at, that high volume low, you're still, bottom line, another 1,100 points away from that low. And this baby wants to get taken. 23,360, folks, in the Dow is the number. We came down 4 weeks ago. We get to 24,122. It's not going to be hard to get there. That's the bottom line. And we'll see how the market handles it when you do get down into that area. If we go take a look at the composite, the NASDAQ composite, the composite right now, it got to a price point out here this morning of 68.30. The number is 66.30. So you can see right now we're 300 points away from it. The NASDAQ composite actually is 70 points off its low, which isn't bad. But guess what? It doesn't mean a lot, because the amount of stretch that we've had in 3 days alone is pretty wild. You've gone down 700 points inside the NASDAQ composite. And when they take the composite apart, folks, this is the normal deal. There are no stops on the elevator on the way down inside this composite. And I suspect, you know, this goes back to the ETF structures inside the market. They're great when the market's going up. It's a disaster when it's going down, because what you do have is this, is that as the ETFs get sold, all the equities have to get sold. As the equities get sold, the ETFs have to get sold. You know, they're going to end up doing a million studies about this, but I can tell you flat out, right from the beginning of 1999, people were wondering why the market had gone down so fast. That was only the beginning, folks. 1999, they only had the Qs, the IWM, and the SMHs, and the SPYs. Guess what? There's so many ETFs now, it's amazing. Stay right there, folks. We're going to be coming back with numbers after the close. Dow Industrials down 534, S&Ps off 51, NASDAQ off 116. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
This is TFNN, the Tiger Financial News Network. TFNN Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow finished down 554, NASDAQ off 119, S&P's off 57. If you take a look at these markets, folks, I believe this is the first day that you have, oh, look at that. The NASDAQ is up 0.06% for the year. Other than that, the S&P's are down 0.1% for the year. Dow Industrials down 1% for the year. So heavy selling out here once again today. It'll be hard to basically get that thing turned around coming into a Wednesday before Thanksgiving. Gold contract down $3.10, trading at $12.22 an ounce. We have silver down 11 cents, $14.29 an ounce. Light sweet crude, big number, folks. Down $3.84. We take a look at that light sweet crude market. You took out the B point of a large ABC structure on the way down, and you do have the volume as you're taking it out. We did monster volume inside the crude contract. Once again today, we had 951,000 contracts blowing away this B point. 45 is the number, the projected number for the ABC structure down inside crude. It's a big number, folks. We were at 76 on October 2nd. Notes and bonds want higher price. Now, you didn't have them move as much as you'd think they would move on a day like today. If we take a look at the 10-year note, it was flat. Now, it's laying right at its October swing highs. It actually took it out, 119.06 or at 119.09. You did do, oh, look at that. That expanded. Okay, 1 second. We did 2 million contracts. So that did. Now, oh, man, this is intense. 2.7. I see, okay. 2.7 was the number. We did 2, but that expanded quite a bit. We take a look at the 30-year bond. 30-year bond, I believe, did that. It took it out. Okay, so here we go. This is going to be big action. 30-year bond also took out its October swing high, has the volume behind the move. We did 454,000 contracts. I see. Now versus 554. That didn't have it either. Bottom line, you're going to higher price. King dollar. Now, King dollar, folks, got back on the other side of its high and did have the price spread. Didn't have the volume behind the move. We'll see whether bottom line can hold this price. 96,450 is the number. And we closed over that once again. We'll see if King dollar can hold. You stay right there, folks. We get more numbers coming out after the close. To recap here, we had the Dow Industrials close down 551. NASDAQ off 119. S&P's down 56. Come right back.
TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Nadex Options Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Communicate with clarity. Communicate with others as clearly as you can to avoid misunderstanding, sadness, and drama. If all humans would communicate with impeccability of the word, all our relationships would change. There'd be no wars, no violence, no misunderstandings. That might be pushing it a bit, folks, but clarity, truth is where it's at. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 551. NASDAQ off 119, S&P's off 56. Gold contract down $2.80, trading at $12.22 an ounce. We had silver down 11 cents, $14.29 an ounce. Light sweet crude, that's the number, folks, big number. Down 382, trading 53.28. Light sweet crude, ABC structure on the way down, 45 bucks coming at us. It blew out the B point today, had the volume behind the move, folks. Big numbers. Notes and bonds, 10-year note flat, 119.08. 30-year up 5 ticks, 139.30. They both are over their October swing highs. I expect you're going to see a higher price, lower yield in the note and bond market. King dollar. King dollar got back over its August 15th swing high. You're up 639 ticks, trading 96.705. 96.450 is the number to keep your eye on in King dollar. We'll see whether, we went over there twice. Both times you came back inside that area with huge volume. This is the third time we're over it again, and guess what? You're over it with light volume once again. Euro. The euro is trading 113.69 to $1 US. The yen is out here at 112.70 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you get? Well, we're getting closer and closer to this high volume. This February 9th, high volume swing low, folks. When you take a look at this, we put this on a weekly. In the SPY, that number is 252. 3 weeks ago, we get down to 258. This morning, we get down to 263. You're closing at the lows of the day, and this is going to be dangerous just in the texture of closing at the lows of the day, coming into a holiday. What you had last night is that we had the NDX 100 jump the creek. It looks to me like the SPY is going to be the culprit tomorrow morning, jump of the creek. The reason being is that your last high volume low is 259 in the SPY. We closed at 264. I can see the SPY opening tomorrow, down another $3 at the open, just hammering into that 259. if we go over and we take a look at the NDX 100, the 3 Qs, you'll see what we're talking about when we say jump in the creek. What the Qs did yesterday is this. The low that was established out here on the 29th of October had been 160. We closed yesterday at 161.54. Bottom line, the Qs opened today at 158, and we closed at 159. That's a jump, and what you do have inside the NDX 100, the number to keep your eye on there is going to be 150. We've hit 157. Yeah, 157 thus far. 7 points is nothing now that you've been down this low. Because the amount of volume, by the way, also, that we've come down with is pretty extraordinary. I mean, this is, they're taking no prisoners on the way down here. Big numbers. The Qs in particular. So picture the high volume low on a monthly basis had 1.1 billion shares. Well, we came down last month on 1.8 billion. You know, this month we've already done 854 million. So it's a monster number, and that saying that this month also is going to have higher volume than what we're going into, and that's problematic. It's problematic in a big way, because what tends to happen is that if you are coming into a high volume with high volume or higher volume, you're going to blow that thing away. If we do take a look at the XLE, you know, oil got hit big time today. XLE hammering into its last low. The last low was out there, 64.37. We hit 64.46, and we did it with more volume. That means that we're not done on the way down. What we did do today in the indices, now this is pretty hard to do in the aspect that you get a holiday week. I mean, it should slow up tomorrow, but in the indices, we came down with expanded volume. We did inside the NYSE, we did 1 billion shares, 1 billion. Inside the NASDAQ composite, we did 2.6 billion. Now, the 2.6 billion, you're going into 2.9. 2.9 is the most we had, and the 2.9 is not the most we had. The most we had at one of these lows. The 2.9 is at the, that is the, oh, interesting. Yeah, no, that was the low that was just established 3 weeks ago. It blew that one away. It closed below it, actually. The low of 4 weeks ago was 69.22. We closed at 69.08. You know, so hey, listen. You know, inside the composite might be game tomorrow for the 66.30 number. That's down. That'll be down another 270 points. We went to 68.30 today. You know, so that is a reachable aspect. Some of the higher volume equities in this market, and we did have volume in this market as we went into lower price. You had Microsoft down $2.90. Apple, big bite out of Apple, down $8.88. NVIDIA, dead cat bounce. That was up $4.35. We had, let's see, Netflix was down $3.62. Let's go to Netflix, NFLX, and let's see what's happening with Netflix out here. Yeah, big number. So Netflix is off a high of 428 or 266. Man, what a hammering this is, man. Yeah, you're 266 and 221 is game. Another hammering out here today was Bitcoin. Bitcoin in 5 days has gone down $2,000. Right now, Bitcoin's trading at 44.17. And what's pretty wild here, folks, is this. Not that, you know, there's really not a correlation, but that, you know, what we did have is that Bitcoin also had established that low at 5,900 in the same week of the high volume lows that are in the market, meaning the February 9th. Then it went above it. It built cause to go downtown from February right until last week, and then just blew it away. And it looks to me like Bitcoin, man, Bitcoin's got 3,000 coming at it with 1278 coming at it. 1278. Stay right there, folks. Come right back.
Hi, folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow finished down 551, Nasdaq off 119, S&P's off 56. And, you know, if we go over and we take a look at these commodity markets, you know, there's no doubt. You talk about a movement. Oil down 7% out here today. Natural gas down 3.5%. We know that both oil and gas talk about volatility, particularly natural gas. Natural gas, you know, basically 15 days ago was trading at $3.16, goes all the way up to $4.90. Crashes all the way back down to 380. Next day, 2 days later, it's up to 479 again. And that's what this story is about here. And this is a sad story because it's always sad when you see total wipeouts in the marketplace, folks. And we were actually talking about that. I was talking about this when this was happening inside the natural gas market. Not this specifically, but it was specific as to the point of, okay, who is blowing up out there? Because what tends to happen is that when you get these fast moves, funds just blow up. In this particular case, I've seen this many times, and depending on how long you've been in the marketplace, as we go through this, I'm sure a lot of you traders have seen it also. And what this is all about, folks, is selling options. So what this story is about, this happens, this guy happens to be right out of Tampa, Florida, optionsellers.com. Bottom line, this is a $150 million hedge fund that blew up and went to zero in one day. So the guy you're looking at, if you happen to be watching Tiger TV, He's the guy that runs the fund, and he actually delivered this news. This is kind of weird, actually. He delivered the news on a 10-minute video on YouTube. Maybe that's, bottom line, that's how he did it. And what it's about is this, okay? James Cordia in a dark suit, cufflinks, expensive-looking watch, sits in a brown leather chair and stares into a camera, his hands folded in front of him. Then he delivers the bad news. His voice breaking at times. The hedge fund manager employs nautical terms to tell his clients in a roundabout way that he's lost all their money in the neighborhood of $150 million, according to one estimate. In the 10-minute video posted on YouTube, he says his clients are like family, but now blaming a rogue wave in the natural gas market that has capsized his boat, and he has failed to steer your investment like a boat and was unable to keep it afloat. Recent gyrations in the natural gas and oil market likely cost me my hedge fund, he said, of the Tampa Bay-based optionseller.com. The collapse is a stunning turnaround for Collier, who literally co-authored the book on the topic, The Complete Guide to Option Selling. In May, foreseeing trouble, perhaps foreseeing trouble, he wrote an article in Futures magazines about the perils of trading natural gas. I suspect he just wrote that article, folks. Because if he was thinking there was going to be trouble, he wouldn't have lost the whole ball of wax. With his firm's money lost, he names clients and acknowledges relationships with them. Okay, so the way this works, folks, okay, is this. And the first time I saw this happen was in 1999. I wasn't around in the crash of '87 of how this basically came down. And this is a system that a lot of people do, and a lot of people make money for 5 or 6 years at a time. It's very small money, but it's steady money. And then all of a sudden, in 1 day or 2 days, they lose all their money. And the first time I saw it was 1999, 2000. And what option, first off, to be an option seller, you're going to have big accounts because, as the saying would go, if you've been around the trading desk for a while, this is like picking up nickels in front of a steamroller. And for some reason, the funds that do this, they have to realize that a black swans always come in the marketplace. I mean, because it's like, okay, every 7 or 8 years, the black swans are always here. It just depends on where they are. Are they, in this case, this was in the natural gas and the oil market. And that what I expect we're going to actually see is this is not going to be the only one. Because the way oil moved, folks, okay, there's going to be a few more blow-ups inside the oil market. Bottom line, just to explain how they do this. So you have a high net worth individual with big money. You're selling options on a continual basis, okay? Well, guess what? When you get a move that is dramatic as moved into the natural gas market, meaning we went living up, that's the wipeout. Right there and then, you're done. All of it. And this particular case, it was all of it. And you can say that the aspect, well, why didn't you get out? You can't even get out in a day like that. That's how this works, also, folks. Okay, so it's not like you do not have defined risk. Also, when you're selling options, that's what this. You have defined risk, all right, but the defined risk could be so dramatic that you just sink the ship. Which that's what happened. So sad but true. But I've seen it way too many times. The thing that blows my mind is that I really can't understand why I guess I can't understand why fund managers do it. They evidently have to think that they're the ones that are going to see it coming, and they're not going to be basically leveraged up to the hilt when they are doing it, because that's how the leverage inside of that is astronomical also. Here, well, I'll bring something up just to show you. Let's see. So if we get a high flyer out here. I'll do this inside well, let me see if I can do it inside the natural gas market just to show you. So I'll bring up natural gas first. Okay, so bring that up. Now. Oh, good, I can do it. Okay, so inside the natural gas market, right, what ends up happening is this, is that right now we're at $4.49, right? Okay, so I'm going to bring this out for you, and I'm going to show you, let's see, what month is this? Where are we? February's. Okay, good. We can use February's, right? Now, what will end up happening is that these premiums will be more than they have been prior to the expansion in price in the natural gas market. So you got to remember that, the aspect. But I want to show you how you get a wipeout. So we'll go to March, I guess. Okay, so we go to March, right? And what you're going to see is that on the call side, okay, you get all the strike prices. On the put side, you get all the strike prices, okay? So let's just say bottom line is that, you know, he's saying to his clients, it doesn't matter what side you go on by the way, because natural gas went both ways. I'm just going to say we're going to go on the call side of this particular point, right? So on the call side, you're going to turn around and say, okay, listen, natural gas said 410. I'm going to sell you the right, okay, to basically, you know, buy natural gas off me at 450, okay? Now, that right's going to cost you 70 cents, okay? So you're going to pick up the 70 cents. That's how that would work, right? Bottom line, that's fine as long as that the natural gas market doesn't go there. If you remember, what happened, natural gas went up a full $1, and I bet that in this particular case, when you were talking about 40 cents, the volatility wasn't in that, and they were probably selling those for 20, 30 cents. And then immediately what happens? It goes up $1, wipe out, and when you come back, I'll bring you and show you how fast that went up $1. It was in the matter of hours. Come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today. TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Nadex Options Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 551, Nasdaq off 119, S&P's off 55. We'll go back over the oil market for a second because this debacle, folks, inside the energy complex will have a few more casualties. Sad but true. So if we take a look at the oil market, what you're going to see out here is it's been a one-way route. $76 on October 3rd. 53 today. We bring this up and we take a look at this. You're going to see this just took this B point out with a vengeance. Just blew the baby away. 54.75. It's going to be intriguing here. We're just short on the volume. We did 1 million contracts there. We did 958,000 today. If I bring this back just a little bit more, what you're going to see, there's not much in the way here. Put that on a monthly. You're going to see that we pierced as soon as we pierced the $55, the other side of that whole number is down there at bottom line. $42, $45, it's all game right now. If we come down one more day like this, it's going to really send the aspect that, well, actually, I can make the case right now. You know, it's so interesting here, is that the way that we came down, folks, we broke the whole uptrend with conviction. And conviction is the wide price spread, accelerated volume. And that'd be hard to comprehend if we're back to $27 oil. That's how this sets up, though. I'll stick with 45 right now, but we definitely broke the whole uptrend that had been in place since February of 2016. February 2016 was the last lows in oil, $26.05 a barrel. We got all the way up to 76. Now, what's pretty cool here is that when we take a look at what type of retracement that was from the highs to the lows. Now, let's see, that's going to be the highs, because the highs are... Okay, let me bring this back more, because the highs are 142, I think, in oil. Bring this back all the way, because this is going to be interesting to see if we only did... Okay, so, yeah, 147 was the high in oil. That was in 08. Now, watch this. If we take this and do the whole deal, wow. Okay, this is dangerous. This is, well, it's going to be good for us. It's dangerous for the oil market. This is what we did do. From the high of 2008, which was 147, to the low that was established out here in February of 2016, which is 26, to the retracement we did, which is 76, that was only a 0.382 retracement of the whole move. Now, that's a dead cat bounce. A 0.382 retracement doesn't tell you much. If it had done a 50% retracement would be saying, okay, you probably have the bottom in, you pull back, but you're going to go higher. A 0.382 retracement of a whole move, all that means is that, guess what? You know, you go right back to the bottom. The way we're trading here, it sets up that, you know, for next stop is 45. If we pierce 45 like we're trading right now, 27 is game. And if 27 is game, let's go over and take a look at, because none of us buy, of course, barrels of oil, but what we do buy probably every day or, you know, a couple times a week is gasoline or heating oil. And inside the gasoline market, if I bring this back and we put this, XB1, let's see where this baby goes. Okay, so gasoline market. This has been a fast and furious move also. We were at 228 in May for unleaded, wholesale. The low that it's going after is $1.30, with the low being 89. 89 was the low in February. The low of 2008 was 78. If we do the same exercise on this, just to see what kind of retracement this was, this looks like it was a little bit more than the 0.382. Yeah, it was. Okay, so here you go. So this is kind of cool watching how this. So in this aspect, gasoline actually did a 50% retracement of the move. Now, when you do a 50% retracement, most times you're not going to go bust out these lows. So we get there's a decent setup out here. The problem is, of course, for the markets. You know, for us individually, that's going to save us a huge amount of money. For the markets, it's a problem. Let's go over and take a look at the XAU, the HUI. Now, these also are in the red today, but what you had in both cases, inside the metal market, folks, you had a rejection of lower price out here today, and we did have lighter volume. XAU traded down to 63.90, closed at 65.17. That says it wants higher price. We look at the gold bugs index, same setup. We traded down to 144. You closed at 147. If you take a look at the GDX out here traded down to 1897, closed at 1930, and then a couple of the individual equities that are the royalty equities, meaning that their correlation has a lot to do with the price of oil, price of gold, rather. Franco-Nevada was actually up. It took out its swing high of October 15th. It's going to need more volume, but it took it out, and it's pierced into the monster volume day down from the 15th of August. That's a big number because that's when gold basically went down big time. So Franco-Nevada looks like it's going to go make a run now to 75. Royal Gold, same type of setup. That rejected lower price at 73, closed at 74.89. Good numbers there. You know, and the gold contract itself did all right. What's going to get intriguing, of course, is the good old dollar. And what's happening, let's go over to the bond market, because the 10-year was flat today. So the 10-year stayed at its highs, but really didn't perform. 30-year went over the highs, had decent volume. We get into the TLT. It's not telling us much. TLT is the 20-year bond fund plus. That is coming up to its swing high of 115. You had 6 million shares. You need like 15 million. When we take a look at the Fed fund future rate, what has happened is that the probability that we're going to go up in December hasn't changed. That's at 70. It was at 68 yesterday. What is changing, and changing pretty rapidly, is the amount of probabilities that they are going to raise 3 times in 2019. And right now, that's just not on the table inside the Fed, the probability statistics. What I expect we're going to see out here, if I'm right in the aspect that this S&P is going to go after the high volume low of February 9th, the Fed, they might want to go up in rates as much as they want, folks, okay? But guess what? If we're down here at 25.32, which is only about another 110 points down, they might go up in December, but this market will take conniptions. And if you've been around on some of the conniptions that the market takes when the Fed starts pulling their interest rate hikes, the Fed will go back in about 2 seconds. They claim they don't look at the market, folks. They look at the market. You know, in fact, when Powell was getting interviewed, he wasn't claiming he didn't look at the market. What he claimed is that he was looking at the emerging market and looking at China. Okay, I'll give you the numbers on China right here. So listen to these. China is down 25 to 31% this year. Yeah, that's a real number, folks. Stay right there. I'll come right back.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. And we just got the API data coming out on the oil market, folks. So this is what we have. You have crude oil stocks fell 1.55 million barrels last week. We had a build in Cushing. They built 398,000 barrels. Gasoline was a build of 706,000 barrels. Distilled was a draw of 1.83. Now, what distilled is, folks, is I suspect where this is going to go, that's heating oil. Well, distilled is heating oil and jet fuel. But the bottom line, that was the draw, and that's what makes it the 1.55. You're going to take the 1.83 and then, minus the Cushing build. We'll see what EIA data comes in tomorrow morning. Now, that's not moving the oil market at all, though. Bottom line is that oil is still laying out here at a price point of $53.41. So it doesn't look to me like what is going to happen at this particular point inside the oil market. The real question is it other? Are we using less oil, or in fact, is there just so much oil out there that bottom line is that supply versus demand? It's a big number. Let's go take a look at Walgreens for a second, because you have Walgreens and Humana are discussing, let's see, drugstore chain Walgreens, Boots Alliance, and Insure Humana are in early talks about taking equity stakes in each other, the Journal reported. So let's see if we got these babies are moving at all. So you get WBA. Walgreens closed at 79.79. That's trading 79.79. No big deal there. Oh, this is interesting, too. What is the big deal, folks, is that this is an equity that has not... Oh, yes, it has. I see. Okay. It's not that bad, though. I mean, the highs... I bring this back. Yeah, it's not a... Compared to what the market looks like, the high of Walgreens was in 2015 at $97. Here at $79. This certainly hasn't taken the heat as the market has taken the heat. Let's go to Humana and take a look at Humana. Humana closed at 307. That is trading out at 306, 305. This has come off the high like viciously. 355 it was 2 weeks ago. And let's see what they're having to say. So, yeah, the companies have held discussion of a variety of joint ventures. The journal report, including expanding their partnership serving older people. The paper cited people familiar with the matter without identifying. Representatives of Walgreens and Humana, bottom line, didn't have anything to say. The chief executive officer of Walgreens has a long-standing interest in expanding Walgreens' business. In recent months, the company has announced partnerships with Kruger Medical, as well as the Medical Testing Laboratory Laboratory Corporation of American Holdings. Its rival CVS is merging with insurer Aetna in a tie-up meant to provide vertically integrated health care services. We should have bought an insurance company 4 years ago when our multiple was higher than their multiple, the CEO of Walgreens said in the Bloomberg offices last month. Walgreens currently owns 26% of the drug distributor AmerisourceBergen, and the Wall Street Journal reported those that it had held talks to buy a portion of that doesn't already own. Yeah, we're going to see all these basically. There's going to be a lot of mergers. The real question is, you know, each one of these mergers, folks, how much more does the aspect of our drug cost go up? Because the competitive atmosphere out here just isn't there. I remember if I look back, you know, in the 90s, you know, you could basically get decent insurance even in small companies, you know. In this aspect, you know, it's changed quite a bit. You know, now in that aspect, though, this is what is hidden, not hidden inside the Obamacare, but this is important to understand. If you have, right now, this is the open window. So if you have a small business, and this is anywhere in the country, too, by the way, if you have a small business and you are having a hard time getting insurance for your employees, the way this works is this, is that the window is open right now. You get another, I think, 4 to 6 weeks. And what it is that the insurer has to give you the same price as an IBM, a Hewlett Packard, anything like this. So it's a really cool deal that they had put in there. So if, no matter where you are in the country, if you are looking for insurance for your employees, now would be the time to do that. Because what does happen is that the rules are the same. The regulation is the same if it's a large company coming in versus a small company. So there's a few. Yeah, well, that's a great number. The real question is going to be inside these as one company takes over another, and they take out the middleman. No, they take over the middleman. It's a problem. We'll see whether Amazon, J.P. Morgan, and Berkshire Hathaway can get anything done inside of that, meaning that they have that partnership going. I expect they're going to be putting their head up in about another 6, 7, 8 months in the aspect of how they're going to deal with drug pricing and insurance costs. If we do look at Amazon out here today, it traded down to a low of $14.20, closed at $14.95. This is not done going down yet either. You know, decent setup out here, but bottom line, it looks to me like there's going to be more pain that's going to be inflicted inside of this market. If we go take a look at Google out here came down to $9.96, closed in the green. Google's going to be another big one that you want to watch, folks, because what Google has done, it has tested that high volume low of February, did it, rejected it, was one of the first equities to reject it, because what happened with Google had come right back after the February 9 downdraft and tested it and then went to a higher high. Okay, so it was a big number. Retail out here, retail got smacked around today. Target took it on the chin in a big way. Target was down $8, 15%. Has monster volume behind the move. We take a look at Target. what you're going to see, Target is back to trading where they were trading in March of 2013. Yeah, it doesn't take much when this thing goes south. Kohl's, same type of setup out here. Let's go see. Okay, so Kohl's was down 10%. Wow, that's almost the same looking chart. Yeah, that really is. Same looking chart as Target. And Kohl's is just not as bad. I mean, you know, yeah, it's off the high of 83 at 64. I guess 20 bucks, that is bad. The amazing part on this downdraft, folks, is the velocity of it. There's no doubt. The velocity of this downdraft, fast, furious, and it's going to be hard. You know, I know everyone's looking for the Santa Claus rally, but bottom line, folks, okay, that high volume low wants to get hit. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks, and we go overseas and just take a look at Asia out here. It's going to be more than likely a tough night in Asia also. So that baby's going to be opening up in approximately 4 hours. If we go to the Hang Seng market first, it was all red last night, down 531 bucks. You get some, we're at 25,840. and it looks like this will be a continuation, probably go after its lowest swing point out here tonight of that 25,092. You take a look at the Nikkei. Now, Nikkei in Japan hasn't been down that dramatically. I mean, we're only off for the year 5%. That being said, you were down 238 last night, and that looks to me like, yeah, it does want to go after this 21,480. The big damage, Shanghai. Shanghai market down 25% thus far this year. We are at 2645, and this baby looks like we got game about 2597. You know, so there's going to be some big numbers out here. If we go over to the UK, you're going to see the UK was down 52 bucks today, 6,900. That's going to go after a swing low of 68.51. The DAX in Germany. We take a look at the DAX. DAX, oh, interesting. Okay, I got to look at this volume. I won't get this volume, I think, for another couple hours. The DAX broke out its lows today. 11,051. Yeah, we broke out its lows. So that DAX not only wants lower price. Oh, I see. It's doing the same thing, though. They're all going after. You know what's so crazy is that the high volume low inside the DAX is 86. And you're at 11,066. So that's got a long way down. Whew, that's intense. And that also, this is what's so wild, folks. These are one world markets. If you happen to watch Tiger TV, you can see the DAX, that's also a high volume low that hasn't got tested. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Have a safe drive if you're driving somewhere. We look forward to speaking right back here tomorrow morning, 9 o'clock. Go get them, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.